My trading lesson for 2013 is simple. Decide whether you're an investor or a trader. One of the things I found that I got wrong quite often was that I didn't know whether I was trading or investing a position. I let short-term volatility get in the way of my decision making, and I ended up getting burnt.
My trading lesson for 2013, it's an old one, but it really came back to me again this year, and it's about keeping it simple. It's about knowing what you do, about cutting out that noise, but at the core of it, trading is about that simplicity, and really it's about making it work for you, and not trying to make it difficult. Complexity is not going to make you profit.
My lesson in trading from 2013 was that if you identify a theme and you think that that big theme is going to play out for the rest of the year, you really need to back yourself with it. And the big theme in 2013 was undoubtedly that you needed to be long of stocks that were of a non-resource rand hedge flavor, the likes of Naspers, Richemont, Aspen, SAB Miller. Those are the stocks that really shot the lights out in 2013. And if you were in that stuff, you needed to just be holding it and hang on to it throughout the year.
My lessons from 2013 is when the market is consolidating or there's any volatility, start off small and then grow your position. Had many mistakes of going aggressive when it's volatile and you could get burned if anything happens, because there's a lot of sideways movement until the breakout happens. That's when you go aggressive. So you go small, then you increase your position as you go up.
There are two stocks that I'm watching in 2014. The first one is Exxaro and the second one is Bullmax. Exxaro is my blue chip for 2014. It offers a healthy dividend yield of nearly 5%. Looks cheap on a single digit price to earnings multiple. The second one that I find quite interesting is Bullmax. It is a small cap company. It is well held by institutions. It's one of those businesses that's just looked interesting for the last couple of years and looks like it's finally coming good.
What we're seeing in the market at this stage is industrials losing a bit of steam, surprisingly financials coming into the fore, and even a bit of excitement happening in the Resi index. The idea of buying resource stocks is scary, but I think if you're looking for a blue chip, Billiton, trading at all-time highs, looking attractive for 2014. If you want to move into the second tier stocks, you go look for a banking stock, and there, the big banks, a little bit boring. I think Sasfin, price to book, about 1.2 times, an exciting company, well positioned within the SME space, and looking good for 2014.
My stock picks, I'll pick two for 2014. The first one, perhaps not that exciting, but I think it's worth a mention. It's the DBX US, the X-Tracker over the US market. I think that we're entering into a major bull market in the US. We are seeing economic recovery coming out of the US economy. Yes, there's this debate around tapering. The reality is it's only going to happen once the US economy is really on a strong footing, and I think that strong economic base will ultimately dominate and will override whatever issues there are around quantitative easing being tapered off. My other one is a smaller cap stock in South Africa, and it's Adapt IT. This little stock is tipped to be the next EOH, a very simple business model, but buying up relatively small tech businesses, issuing stock that's on a PE of 16 times to buy smaller businesses on a PE of 5 or 6 times. That to me is very earnings enhancing, and I think that is a small cap stock that's potentially got a long way to run still.
Personally, I love stocks that are coming off very low basis because they're cheaper. So mine would be the construction industry, because it is coming off a low. It can't fall any further than where it is now. Coming off very 5-year basis, starting to show some upside potential. You'd really want to start nibbling at these levels because they're looking attractive, particularly Murray and Roberts.
Forget Twitter, forget Facebook. I'm not interested in either of these companies. The one I like is good and stable, it's Google. What more simple than a simple landing page which asks you a question? What do you want to know the answer to? Google trades on an earnings multiple of about 16 times earnings. It's paid a regular dividend. It's a business that just looks interesting, it's consistent, and advertising isn't going anywhere in the long run.
tech titan for 2014, yeah, I know. .com written all over it. .com boom, .com bust. I like Twitter. Thomas Frieden wrote in his book, The World is Flat, how internet ultimately removes time and geography from that equation, and Twitter is right at the pointy end of that. They've got traction. They've managed to do their advertising without offending users, something Facebook has never managed to do. The current $40-odd price, not interested. Down around the $30 price, Twitter, my pick for 2014.
My tech titan for 2014 is also going to be Twitter. I like the look of the stock. I think that also it's come to market at a time when it's still got a massive amount of growth potential ahead of it. What I read recently is that Twitter has around about 230 million current users versus Facebook, which has about 1.2 billion. So you can see just from that Twitter has a massive amount of potential growth. Also, they've got the mobile aspect of their business right, which is something that that Facebook seems to still be struggling with. So I think Twitter's got a lot of growth. It's come to market at an exciting time. Yes, it is expensive at the moment, and there's a lot of hype around it at this stage. But if there was to be a little bit of profit taking in the near term, I think any weakness you can look to buy into, because this is a stock that does look like it's still got a nice long road ahead of it.
Okay, I'm going proudly South African. I'm not interested in the international stocks. Although tech stocks are not really exciting me in any way at this point, but if I had to really pick a stock, it would be Business Connection. It has been consolidating for quite some time now, broken out of a pattern that just does secure a bit more upside, but still from my lessons of 2013, you would go slow and then increase on every resistance level breakout.